these establishments waking up to the fact that fiat money debt can never be paid back with fiat money?
I wouldn't quite go that far. Just to correct one thing, it wasn't the LBMA officially saying that they expect a price of $5,000 in 2026. It was the result of a survey of the attendees at the LBMA's conference, and that was the average of all the expectations. This doesn't surprise me because what we have seen is that the bullion banks, particularly the members of the LBMA, have basically they've straightened their positions. They're not short, they are long of physical, and they're trying to stay long of physical, which of course is why it is that we see the gold price rising without the backwardations that we see in silver. In other words, the establishment has got a little bit of positive liquidity in the form of physical metal on board, and it's very keen to keep it at a time when demand for bullion is rising. So I think that the attendees' estimates are, if you like, honestly reflect their expectations coloured by their own positions. They're no longer short, so they don't want to talk it down. They're just, if you like, neutral, I think, to the whole thing. As to whether they understand that actually what's happening is that it's fiat currencies declining in their purchasing power rather than gold rising. I mean, my experience of LBMA members is that they don't look at economics at all. And furthermore, they don't actually understand economics. So I don't think that I would draw the conclusion that they're seeing what we've been discussing really over the last year or two. I think they quite honestly are just market makers. They're just sitting there. They're looking at bullion. They're looking at their liabilities and making sure they're covered with physical metal. Now, that said, there is not a lot of liquidity around. So they are responding to demand for physical metal basically by raising prices so that they don't lose their own liquidity.